Welcome to this very special New Year webinar where I'm joined by three of the heavyweights of the distribution sector, and we're here to talk about all things positive for 2025 and reflect back on some of the trends that we actually saw through the 2024 year. But I'm delighted to be joined, as I say, by three of the industry's finest, and I'd actually let each of you introduce yourselves if that's okay. So I'm joined by Neil Hoare, Martin Reynolds, and Emma Hollingworth. So, ladies first, Emma, if I may. So, can I introduce yourself and let you just tell the audience, anybody who's been living in a cave who doesn't know who you are.
Hi everyone, thank you for having me. I'm Emma Hollingworth. I'm Cheif Distribution Officer at LSL for Financial Services, so Primis and TMA.
Martin, come to you next.
Yeah, Martin Reynolds, CEO of SimplyBiz Mortgages and Chairman of FIBA, the Commercial Property Finance Trade Body.
And then last but not least, Neil.
Neil Hoare, Commercial Director at Home Loan Partnership, HLP. Yeah.
You probably start, if I may, with yourself, Martin, and really just rewind, because again, I know we did one of these sessions 12 months ago, and we were talking back then about consumer duty and just the challenges that we'd faced actually implementing consumer duty into the 2023 year. I'm just interested now around maybe some of the factors. What were some of the most challenging factors that you saw some of the SimplyBiz distribution actually face through 2024?
Yeah, I'll say let's not watch that one back because they'll throw everything that you said was going to happen in 2024 up. Let's see how many we got right or even actually got at all, full stop. Yeah, I think there was a lot of things that challenged us yesterday, so I won't pick on too many. But if I pick out two bits, I think it was the continuing volatility of the market. I think there was that, swap rates going up and down and moving around, lender services, rate pulls, all of that sort of thing. And I think that very much was across the whole year. It didn't stop to a certain degree, but I think what it has done is it's brought more into focus to the broker market and to the consumer that what base rate is predicted to do or even actually does no longer has a real bearing on swap rates. It's the fact that things that can happen in America now happen in Europe or other parts of the world are affecting swap rates, even though base rate may or may not be moving. And I think that's a fairly newish phenomenon. So, that's probably a 4 or 5 year thing, whereas 15, 20 years ago, it was all linked to what's happening to base rates. So swaps didn't really move much at all. But they'd work that in, whereas now that volatility of a swap rate is what then leads a lender that might have a great rate with some money that they've bought today, but they run out of it very quickly if swap rates jump 5, 10, 15 bips. So I think that was one bit that I think was that definite challenge as we went through. And I think the other bit for me was the change in government. I think not so much because it was a new government and who they are, but more the fact that you had that change, because it sort of stopped the market for a bit as everybody sat there and waited and went, so what does this mean then? What's going to happen? So some people will have sat there and gone, well, I'll just wait now. Is base rate coming down? I'll wait. What the government going to do? And I think what wasn't helped in the actual budget is there wasn't anything really there for the housing market as such. I don't think most people expected it, because I think that the government is looking more towards how do they make the access easier to build a house rather than how can we support the market to actually buy the house. But I still think a lot of people sat there waiting for something. Are we going to get help to buy number whatever? What is going to happen? And I think because that didn't happen, that just left a bit more uncertainty that's dropping into this year.
Yeah. And Emma, was that, I know obviously you got a big role within that Primis distribution now, and I know you've only been there for a couple of months, but what kind of challenges are the guys? Maybe you've obviously met a number of the ARs as you've joined. Mm-hmm. What kind of challenges are they talking to you about?
Yeah, I think I agree with what Martin said, really, but I think everybody assumed in 2024 that interest rates would fall quicker, and well, actually fall quicker than anything did. So I think everybody was expecting a relatively uncomplicated year, which actually turned out to be relatively complicated, not only from a distribution point of view, but also from a lending point of view, because, you know, I've spent some time in lending, and how on earth do you price products sometimes when the swap rates are acting in a way that you're not expecting them to act, and that then has a knock-on effect to, you know, rates being pulled, products being replaced at short notice and that kind of thing, but also that then knocks on to the work that the advisors have to do. So, you know, where you're perhaps placing a mortgage once, and actually the fees that you're charging and the remuneration that you're getting for doing that, you're having to do it several more times, and therefore, you know, you're not as able to see as many customers, and it just has that knock-on effect to the profitability of not only the firms but also the networks as well. So yeah, I think that was a real challenge. And if you think that the market, well, 2024 ended on a, I think, 1.1 million mark with regards to transactions, which is still less than pre-pandemic levels, then, you know, it was a difficult market, I think.
Yeah. The inertia, Neil, was that something? It's a really good point, isn't it, around that lack of certainty we saw with with government, and maybe with what was going on in like macro levels with, you know, Middle East and Ukraine, actually disturbing and seeing advisors actually disturb landlords to maybe take action and actually create opportunities. Did you see much of that, or how difficult was it for advisors?
I think it was very true, as Martin and Emma said. A lot of the market was based around sentiment. I think we had the election, and then we had the bad news story. We had this big deficit that was coming out, so we're all just waiting for this bad news to come out before making decisions. And then base rate goes down, bad decisions, then the decision gets made, and swap rates go up. And so I think the customers were expecting a downward trend, and now we're probably a little bit stagnation, aren't we, as far as base rates go? We don't probably want to see anything move in the next was it next week? I think we get the next base rate move. So they probably won't be moving in that as we wait to see what happens in the market. So specifically buy to let world, I think a lot of landlords, I don't think we're seeing landlords sell. I'm not getting that feeling that there's the predictions that everyone will be exiting the market is true. I think there's a lot of repurposing, so a lot of personal going into limited company. We're seeing a lot of that happening. So I just think there's a lot of introspection going on at the moment. I think the market is the market, and certainly landlord side, I think there's a lot of people thinking, what do they do with property portfolios in terms of just hold, or what's the best time to grow? And in the residential world, I think I get the feeling estate agents are quite busy, but not selling. So I think there's probably a lot of interest at the moment. It was interesting. I did hear one broker today tell me that obviously we're in January, and January is a self-assessment month. And so a lot of people are waiting to find out what their self-assessment looks like in the self-employed market before they make a decision. So there's lots of little things that are happening in sort of general public world that are probably preventing the market from really taking off. And I think that was probably reflective of 2024 as well. What I do like, I think is the fact that a lot of the brokers we talked to are very resilient. They've been quite resilient in that market, irrespective of the fact they have to revisit cases several times before they get to the point of completion and chain break and the like. I think there is a lot of resilience out there at the moment, which is very positive for 2025.
I think just to add to that, Neil, that they absolutely are resilient, because if you look at the broker share of market, it actually went up in 2024, which is an amazing thing. And if you look at the IMLA forecasts for 2025 and 2026 of broker market share, I mean, we're forecasting in 2026 for 91% of the market to be broker driven. I mean, that's just amazing news. But I think what that is the general public really understanding that they do need advice, and advice is king, and brokers working hard to make sure that advice is given. So I think despite the market, the resilience of brokers, but also the expertise and the need for advice is shining through.
I totally agree. I think I've had comment from some brokers say we don't have customers anymore. We have clients, because actually we're moving away from that transactional activity with the people that come and see them into relationships, which is it's a nice idea that we're moving away from, because we used to, in the old days, just used to be mortgage. Now, I think in some ways Consumer Duty has driven that in some way, probably not directly, but there is a perception now that actually there is a change in relationship with the I was going to say the customer, but the client. Yeah.
And look, I saw that figure as well, Emma, from UK Finance and IMLA around the 91% share. And what was particularly exciting, I thought, was, look, I've spent the last 2 weeks a little bit of a shadow trying to understand more about AI and how AI could be used as an enabler within the business. And it is so brilliant, many of the different tools that you can actually see. But ultimately, no matter how brilliant it is, people, when they're making the biggest financial commitment of their life, still need some sense checking. They still need to have a conversation. And what the 25 years plus in the sector has demonstrated to me is that when there's a bit of confusion, when there's a little bit of doubt, customers need more advice rather than less advice. And just what about, I'll probably come to you, Emma, if that's okay, just around so we mentioned 91% as an actual share, which is great within the intermediary community. The kind of numbers that we were seeing forecast from IMLA UK for Finance was suggesting around about 275 billion for this year, and what was it, 295 billion in 26. So when you consider what was 235 in 24, which was only 4% up on 23, it does look like the forecast is particularly optimistic. I mean, do you share that kind of view when you're doing your business planning? So that 275 and 295, does it seem realistic?
Yeah, I mean, we've definitely forecast for an uplift, 100%. And I think if you look at it's huge refinance market next year, I think 1.88 million. Sorry, this year, we are now in 2025. But also, the purchase market. I mean, at Primis and TMA, we saw a huge purchase market last year. I think then that comes with different challenges, actually, because you see a huge purchase market and advisors are busy, right? I don't think I've spoken to one advisor that's scrapping around for business, whether it be the existing book, but also new business walking through the door. But then that gives us a different concern, especially from a consumer duty point of view of we need to make sure that the protection is in line with that, because if you realize in the customer's dream of home ownership, you've got to make sure that they can stay in that property as well should the worst happen. So I think definitely forecasts are aligned, but I also think we've got to have one eye on making sure that firms don't just deal in that transaction. And a lot of the Primis firms are really good at not doing, but also including that protection element in there as well, to make sure that we're completing that whole good customer outcome.
It's getting the right forecast, because I think the ones that you've just said are probably misleading, and either in this instance they're probably giving too much of good news, and historically they've also given too much of bad news, because we're a PT business now as well, whereas historically we didn't do PTs. It was either you did a purchase and a remortgage, which is what those figures are. But we're in all of those transactions. We're not at 90% yet for PTs. We're at about 65% intermediated. So for me, it's how big's the total market? Because some of that jump that you've talked about is because, as Emma rightly said, it's a huge cessation market. It's 390 billion. Is that jump because of that, or is it because we're going to do more remortgage versus product transfers? So some of that growth is just that thing that a broker's going to be doing the deal. It's just not going to be a product transfer as it might have been last year. It's going to be a remortgage. So for me, it's how big's the wider market? So last year it was around probably going to be about 480, 490 billion, including product transfers, not the 230 odd that people are saying. This year, I think it's going to be about 520, 530 billion. Because of that additional remortgage PT bit. So for me, it's still a good news. It's a bigger market. But we need to talk about the whole market, because our advisors are advising in the whole market.
And I think, Martin, I don't know, I've read various things about, refinancing in terms of remo against a PT for this year. And actually, there seems to be more optimism around the fact that we could perhaps offer more remortgages rather than PTs because of the way the rates will fall and that sort of thing. And I tend to agree with that, I think. And you know, and I think the PT market is, whilst it's completely necessary, and talking of AI and things like that, I think there's some efficiencies that could actually be brought into that for advisors, from a transactional point of view, as in transacting the PTs on behalf of their customers. But I think that you know, when you look at the whole customer in the round, really if we can look at the refinance in terms of remortgage, that's where the protection opportunities come as well. And we should always, as advisors, be talking about PTs and remortgages, but I do think the market will give and help that remortgage opportunity more this year as well.
I do think there's a slight challenge on that one, Emma, in terms of when we're in a nervous market, customers tend to pay down debt rather than increase it. And so I just wonder whether or not the PT market will be quite large, simply because people will just try and reduce debt as opposed to increase. Remortgage tends to be rebuilding savings, or have, you know, I want to put a new kitchen in, the like. I mean, we always talk about the skip to board count, don't we? And how many people are renovating rather than moving. And
it was interesting to see in the IMLA report as well, the stat about baby boomers, and the fact, you know, I think 49% of them last year made up the market in terms of without any mortgage, but also, you know, the behaviour of them moving forward will be that, you know, they don't need the finance, but the houses are coming back into stock and all of that because they're downsizing. So I think that's an interesting sort of slant on the market as well.
I think the other bit for me is, the last few years, anything that's coming off a cessation, 95% of the conversations are, this is what your new increased rate's going to be on a monthly premium. This year, you still probably got 40% of that figure roughly is coming off a 5-year. So there are going to be still 40% of the conversations are, you've coming off a 195 to 250 rate, you're now going to go to a 4%, whatever. So there is that. But 60% of this year's cessations are post Liz Truss budgets. So these people are probably going to be coming off 5-6% potentially. So there's good news conversations about we can actually take your payments down again. And that then opens up the conversation to protection and everything else as well, that you could do that. But I think that's a good thing, because I think brokers have had the last 2-3 years of virtually every remortgage and PT has been, how little can I get it to rise for you, rather than how much can I save you.
Yeah, I agree.
You know, the systems and processes that we've got around supporting the advisors now. I mean, 1.8 million is a big number, isn't it, to go at? And are the systems and processes, do they really serve the advisors competently and well enough now to, you know, really confidently target in on those opportunities? Go to you on that one first, Neil. I mean, your systems and processes, so how well equipped are we to really identify and help the advisors with those opportunities that they've got within the 1.8 million? Well,
for HLP, we do have the data, and we are working actively with the brokers to highlight those opportunities for them. We also support them with a pretty comprehensive marketing program, so they can get out there and tell people that weren't necessarily customers of an intermediary beforehand that they can access an intermediary and go through that comparison process. So I think there is I think those brokers that are long established in a market do have pretty good systems in place. I think obviously the mortgage charter hasn't helped in the last couple of years. It has helped customers, but it hasn't helped the broker, because they've had to revisit as rates have fluctuated. And that's been a bit of a challenge for them. But I think certainly some of the lenders are now moving away from that charter, 3 months, giving less time for customers to change their mind, and that helps fix, do the deal. I think ideally, as we get into 2025 big time, then it's a one and done. So actually, here's the recommendation, and then move on from there. That rather than having to revisit. And I know some of our guys do it monthly. Has the rate moved? Do I need to go back to the lender? And I suppose there's a little call on lenders to be a little bit more consistent in terms of just products. I remember the day when I used to do these sort of things, and you had product on offer for, typically 3-4 months, and at the moment it's 3 or 4 weeks. So I think there's a challenge around just making sure that the pricing of these products is a little bit more consistent, and that helps systems from any broker's perspective to move on.
And then Emma, within Primis then, so again, I know systems, and I know you've really focused on technology, and I saw the Mortgage Brain announcement before Christmas, and I know there's changes afoot with the Primis business, but actually serving up and supporting the ARs with being able to identify and really work that back book. How are you doing in terms of like delivering that kind of support into the ARs?
Yeah, I mean, we've got, the announcement for Mortgage Brain, we've got a heavy and expensive reinvestment plan into technology and process and procedure, but because the key to helping advisors is to bring efficiencies, and maybe we'll touch on AI a little bit further into the chat. But I think Primis, we have the data as most of us do. It's helping to serve that up to the brokers and firms in the most efficient way. And what I mean by that is I think there's more investment that we can do into digitally nurturing those customers and feeding those customers helpful information and making those processes more efficient when it actually comes to making sure that customer's got the right outcome for them. So that is something that we will be working heavily in conjunction with Mortgage Brain, but also maybe other partners to ensure that we've got, I hesitate in using the word best in class, I don't really like the word, but best in class solution to make sure that our advisors have that information at the fingertips in order to serve their customers better.
Right. Martin, I want to move on and talk about holistic advice and pick up on the points that have just been raised around using all that goodwill at generating a mortgage actually should deliver to an advisor. But was there anything else you wanted to comment on regarding I suppose I know you've been passionate in the past about how advisors really sweat the back book and work the back book and identify these opportunities.
I think the technology is there. If you go for the simplistic form, if you've got a CRM system, you've got all the data and the prompts within there. If you use it to tell you when the client's there, I think the bit that Emma was saying is the bit in between when you did the deal and when you go back to review the deal is how do you interact with them in that 2, 4 year, 5 year period, whatever it is. But I think the technology that says to a broker, you've got 37 deals coming up in this quarter that are up for renewal, that's already there because it's just a pure CRM system with the diary management. It's then having the process and the time to then actually make sure that you've got them all in the diary, you've got the contact, and you've seen them all at appropriate time, that either they forget who you are and go and find another broker, or they just press the button twice when they get their lender's letter and do it direct. And they're the two challenges more than is the technology there to make sure they don't miss a deal. The technology there so they don't, it's then what they do with that data.
And what about this consultative approach and this holistic kind of advice? I know in the past you've been really passionate about the promotion of protection and promotion of GI. And look, it's not just a case of cross-selling for the sake of it. There's a real again, one thing Consumer Duty have forced upon us is anybody who wasn't delivering that brilliant customer outcome at all times, there's now a light shining on. So it should be easier than ever to actually deliver that holistic kind of solution for a customer. So just interested in your view on that, using that goodwill and the holistic advice part.
Yeah, I think I've always said that. Why are you just selling a mortgage? I'd start with the first bit. What does your business card say? Well, what's your footer say in your email? Does it say I'm a mortgage and protection advisor? Well, you're only doing half that job. So if we do it from a protection of your own self as an advisor, if you're not doing the other half, you've got a PI claim waiting to come. If you then look at it from looking after the consumer, well, you're telling them at the start that's what you do. So why aren't you doing it? And I think you're right. Consumer Duty has definitely brought that into a focus. And I think it's made a lot of people make decisions. And a lot of people have started to say, I'm still not going to do it, but I'll refer it. But I'm going to refer it every time. rather than here, there, and everywhere. So I think that's a good part of it, that the customer then is getting that opportunity on every deal, and they're doing that. But it come back to, why wouldn't you? Why would you let somebody else sell them a financial product that you could sell or advise on, that they'll then want to try and ask them, well, what other products have you got then? They'll say, I got you more as well. I'll come back to you in 2 years and then I'll do that. So they're there, the technology is there, all the processes to refer is there, so that that customer knows that you're that person that deals with their financial services or their mortgage and safety bit, not I've got one bit here, one bit there. And then, you know, those sort of challenges, when you get that, you start looking at your bank account after a couple of years and go, well, I've got that direct debit with that company, that with that. What is it? Who is it? Because you spoke to so many different people to get those, you stop knowing what you are. Whereas if for a broker, he's giving that holistic client advice, they can have that yearly review with them that says, here's everything that you've got, and they're getting that reminder so those direct debits don't get cancelled because they can't remember what they've got, or who actually advised them to take that policy out, so they don't know who to go to ask about it.
Yeah, so ring fencing that customer, Emma, and keeping the competition out is so important, isn't it?
Yeah, it really is. And I think that look, there's some brilliant advice firms out there. And I think if you look at the market today to what the market was 10 years ago, it's a completely different landscape in terms of the advice that's given, the compliance, the oversight, the consumer duty, and everything like that. And I think it's, some firms are better looking after their customers than others. And what I mean by looking after their customers is not doing a good job up front, but making sure they keep in touch. Others are more sort of transactional, in the sense of somebody walks through the door and, like Martin says, they make referrals to do it. But yeah, I think, customer's king at the end of the day. And if you haven't got the customer, the broker hasn't got a business. And if the broker hasn't got a business, we haven't got business. So, it's as simple as that. We do everything we can to encourage, holistic advice across the piece, really, at Primis.
Neil, being a generalist, mate, it's more difficult probably than it's ever been with the maze of solutions that are actually out there, and trusting a third party to deliver that solution is a massive leap of faith, isn't there, in actually trusting somebody with your customer, with your client?
Yeah, well, we've got some long-standing relationships. Martin talked about referral programs. We have that internally, so we've set up our own firm within HLP that we have a control over, that delivers that trust, and all our referral partners tend to turn up at all our events so that they can build that. It's easy to say, here's a website to go to and put your customer in and off you go, but actually meeting the people that will take control of your customer whilst you're to do what you can't do is a real plus. This is a very person-to-person business. I think that's the nature of our world, is very much relationship-based rather than transactional, and that trust is built up over time, and that makes a big difference. If you see the whites of their eyes and know how they do, what their business stands for, what the culture of their business works, and then also that you've got some engagement with someone who can influence, then that makes a big difference. So it takes a bit of time. It's not an immediate thing, but it is a relationship piece.
And you know what? Look, I think it won't surprise all three of you to hear that our biggest growth area at Crystal last year was seeing our refer and earn for bridging, commercial, and buy to let actually double. So it's now a 40% share of our overall volume rather than a 20% share. And we've got a number of new build brokers who are absolutely amazing at doing new build, but when it comes to maybe a more complex chain break or a more complex applicant profile, then we've proved to be a useful fit. And I just see the responsibility that sits with us when when an advisor trusts us with their customer, particularly in that new build environment where there's huge demands on the new build broker to deliver for the developer. We accept the responsibility that comes with it massively. So making sure there's remote visibility via various tools. Just keeping them, just want communicating, don't they? It's as simple as that. But I want to talk about the specialist market and the opportunities. I know you mentioned before, Neil, about maybe repurposing some of the assets, but I think Martin indicated earlier about the product transfers and how, what a big part of the market that's going to be for this year. So if it's a 530 billion sort of market, it's eye-watering numbers. But the specialist market, we've obviously seen this. I suppose new government come in, and they seem to be doing everything they can to make it more difficult to actually code data day to day. And I just wonder about the credit profile of people moving forward, and we've all seen the various cycles over the last 20 plus years, but just the specialist market, Emma, in terms of the opportunities that advisors have got in that. So I think buy-to-let took a bit of a kick in over the last couple of years, but the specialist market, I suppose, extends beyond that buy-to-let now. So I suppose it goes into that credit impaired, it goes into your commercial, semi-commercial, and you maybe your bridging finance. Just wonder how much of a focus Primis have got in the specialist space, and what you're doing to try and encourage and educate the ARs.
Yeah, and it's a really good question, because what is specialist these days, right? Because you've got since the pandemic, the whole a profile of a customer pre-pandemic opposed to a profile of a customer post-pandemic, with the hybrid working, the way people are paid, the expenditure, the income, coupled with all of the cost of living challenges that people have. Is what is the definition of a specialist rather than a conforming, I guess. So there's that question for me. And then also you've got the challenges of bringing innovation into a market which is heavily regulated. And what I mean is innovation in terms of products which can help in that specialist space, and whether that be the first-time buyer market, whether that be the impaired market, whether buy-to-let, the whole market, because there is innovation needed to fit the profile of the modern day customer. I think what's important at Primis is identifying the different specialist market. What I mean by that is the customers that sit in those markets, not the markets. We've identified those, and really, how can we help those underserved customers if they are underserved, and what's the best way forward for that? And if I'm honest, Jason, I haven't really been in our business long enough to be able to give you a clear answer on that for Primis, but it's absolutely a focus moving forward. And we have arrangements in place at the moment, but it's absolutely a focus moving forward to make sure that there is a home for every type of client, really, because otherwise it's we don't want any underserved customers out there. If we can help it, we want to make sure that we cater for all of those customers via our advice network, if that is at all possible.
And Martin, that solution focus, so having been customer centric, is irrespective of circumstance, the solution is going to dictate I suppose the lender that's actually selected. But again, I know that the specialist space in its broad term it's an area you've obviously operated in the past, and again, I know it's something you're passionate about. How do you see the specialist market actually developing over the next 12 months?
I think there's the two areas. You look at the buy-to-let specialist bit, and then you look at the residential. In the buy-to-let bit, we've seen the landlords move towards the semi-commercial, commercial, HMOs, etc., bridging, because the yields aren't there on a traditional buy-to-let, or aren't as great. So that's that repurposing of that. So the advisors had to follow them, and what we've seen is they've been asking for a lot of support, and that's probably one of the reasons where when FIBA came into the market, and how we've done that and built that as a trade body. And one example is they've been going, we want to go into the market. What is that market? How do I learn about that market? And one of those bits was us working with LIBF, who do CMAP, and creating the Certified Practitioner in Specialist Property Finance certificate, which allows somebody to go in and do that work and understand the market so that they can then start advising better in that market with more knowledge when they talk to lenders or when they pass to you. At least if they've done that, even if they're still referring to somebody like yourself, Jason, when you're talking to and asking for things, people understand what you're asking for, because it's back to the terminology is totally different, isn't it? You know, when you're asking for, you know, what type of property is it? Is it ground up? Is it halfway? Is it, you know, all of those things, and working out that. So we've worked very hard on that to help the broker move across into that, to follow their landlord, and then open up everything else within their database to say, have a look at your database. What's their job title for a start? Does that mean actually, now you understand that market, there's a lot more opportunities in there than apart from just your previous landlords. And then in the residential space, the specialist, yeah, it's an interesting space, because you've got the specialist lenders, but you've also got the building societies fighting for that space. And then you've also got the big high street lenders occasionally just tweaking a scorecard without telling you in the background, because they just want a little bit more business in that space. So you've got the specialist lenders sort of sitting in the middle, and they're being squeezed from top and bottom. And then you've got the old bridging lenders who are going, well, actually, we might as well go into a bit of buy-to-let space as well, and we'll do the bridge and then we'll do the buy-to-let, and trying to knit that. So it's quite an interesting space, as you've got a lot of players all trying to position themselves differently than they have done previously.
And look, and amazing work on your part and Phoebe's part with the education bit and introducing the exam, because again, I think it just validates that. That knowledge, and brilliant work on that. And then Neil, I know, look, you invest a lot of time personally on the various events, so that education bit within your distribution when it comes to the specialist space is more important, or it's really a big priority for you. So how are you going to mobilise that as you go through this year? And I suppose what kind of focus are you delivering in this specialist space?
It is interesting in specialist. I mean, again, going back to Emma's point, how do you define specialist? Because you've got specialist customers, you've got specialist property, specialist occupations. You know, there's a lot of specialists around that. I think the challenge is there's a lot of lenders in that space. It's making sure that the AR base know who's good at what are their specialities. So recognizing this is a self-employed customer with 3 incomes coming in, who would, you know, don't waste time. Find out who is good in that area. So I think that one of the key challenges for us is to make sure that the panel recognises the different complications and the challenges that the brokers face in identifying. Because it's not in that space, it's not typically about price, because they'd have tried with the high street, they've then perhaps gone to a tier 2, and then actually we're into third stage placing, and that means not hitting the credit file again. So actually understanding where they can go, and I suppose I go back to relationships again. It's having a decent, you know, working with the lenders to make sure that they understand the process the broker is going through. You know, direct to underwriter is always a great opportunity. You know, on discuss a case with the underwriter. The number of complaints we tend to get where a sales team has said yes, we'll do the case, and it's got to underwriter and they said no, it won't, because there's been a confusion in that process. Whether the broker's thinking one thing and the underwriter and the sales guy on the end of the phone is saying something else. So, and we know that BDM resource is very tight. So it's actually making sure that there's clear guidelines. So what is this lender really good at? What can they do? Where is their expertise sit? We change webinars, for example. We're not doing criteria webinars now. We're doing how to read accounts. What type of properties do we like? Rather than purely bullet point sessions, it's more the background to the lender thinking. Why would we do that case and not this one? Scenarios. We're doing a lot more case studies in terms of communication, so that actually there is a picture of the customer and how that fits the lender, not just in its criteria, but in processing an appetite for risk. And you tend to find your conversion rates are a lot higher. We do look at conversion rates. I mean, some of the you know, probably anywhere between 45 and 60 tends to be a good percentage conversion rate. If it's lower than that, then we ask questions. So what are the things that are stopping this case from going through? Why is it bouncing? And then addressing those with communication. Say, look, if you're going to use X, Y, and Z, look, you know, they need 3 sets of accounts, and don't include this because they won't like it. So it's a lot more granular, a lot more background, as opposed to purely, yes, we do 75% in self-employed airline pilots. So yeah, it's a bit of a different world now in which we communicate.
I just want to touch on AI. I know we mentioned it a little bit earlier and technology, and I suppose just addressing the importance um, of AI and just the progress that is or isn't being made in our sector. I mean, how is technology at the moment actually influencing the ability for advisors to actually trade? And I'll probably come to you, Emma, if that's okay. I know you've only, as I say, been with the business for a few months, but I know you've got this technology focus. So we spoke about AI before, and we spoke about that mortgage brain relationship. And I'm not asking you to give away the keys to the safe here, but just the importance of technology and where you see us at in terms of maybe the efficiencies within our sector, maybe compared to other sectors. Where are we in terms of that technology and the part AI can play?
Yeah, I think because obviously I spent a good fair while at M-Cube Empowered, which was all focused on technology and actually putting AI into live production environments in order to help processes more efficiently. And I think so there's a few questions you asked me there. The importance of technology within Primis is to create efficiencies to ensure that firms can be as productive as they want to be. I think there's a lot of process and procedure that can be made far more efficient. In answer to your question with regards to how far are we away from other sectors, I think we're not as far as we were, but we're still a very, very long way away. Most other industries over the last 10 years have changed completely the way that customers interact with them using technology, and some of that is AI. I think we have to be careful about what we think AI can do and what we think AI is when we're talking about the use of it within our industry. A lot of Mortgage Brain has got elements of AI in it. There's systems out there that have elements of AI in it already, but actually it's what AI on its own won't do it. You have to then put large language model, machine learning, etc. around it in order to bring the rationalization to make it happen. And I think as far as AI is concerned, certainly in the foreseeable future, what it will be used for within our part of the industry is to create those efficiencies. So to make processes a lot easier, to get data from a true source rather than what we think. Because if you put data in that's rubbish data, you're going to get rubbish data out. We can build AI and help use that to make sure that the data we're putting into systems is completely the truth, if that makes sense. Will we see advice being given with it? I can't see any evidence anywhere that tells us that people don't want to talk to somebody and be advised and for somebody to hold their hand. So as far as AI and technology is concerned, especially in the Primis world, is to create those efficiencies and to make sure the data that we're putting into those systems in order for a lender to make decision, a provider to make decision, is truthful and accurate data.
I think for me is that bit that you said, Emma, it's not the answer, it's part of a solution. And I think there's plenty of efficiencies already out there for people to have in their business by using the technology that's already there to its fullest. We all probably do. We get some technology and we use a part of it. We have, sometimes it's because we don't understand it. Sometimes we don't have the time to invest in to understand it or work it. So there's already efficiencies there. But I think some of the bigger efficiencies of that straight through processing into lenders, we're still a pretty long way, because I think you've got you need the big six to be in there doing those sort of things for it to become a proper adoption. So at the moment, what you've got some really good lenders that have got some technology that allow that through. But if still 75% of the business is going through the top six, if you're an advisor or an admin with an advisor, you need to be doing it on 3/4 of your business and pressing the button knowing it's going straight through, to then say, well, why aren't the others doing it? At the moment, it's the others doing it, and people go, are they there just for a dip, or are they a full app or not? And therefore, it's quicker if I just key it back on the lender system. It's getting those the big six or two or three of the big six on there, so a big proportion of people's business is going through that flow, and that will just push it through.
I think my challenge with all the AI stuff in terms of the sales process is my biggest frustration in some ways is the phrase underwriter discretion, because you have a grey area in the underwriting process where the tech will say this is a potential case, but someone who's been a broker for 10 years, 15 years will know that's never going to run. And so there's it's very difficult to take an experienced broker's experience. You might have data, but it's the experience of the broker in the way that they interact with that lender and how they position a case with the lender, rather than actually whether it goes or not. And that's something you can't necessarily convert into an AI world. I mean, I always remember, remember when Tesco Bank came out in, was it 2010? And there was all this view that said they were going to take their club card data so they could see the spending behavior of a customer and then make a decision. You know, if I'm going down the aisle and I've got 20 bottles of wine on my conveyor belt, probably not someone I want to lend to. But that never really matured. There was that level of data there, but it wasn't actually being used in the process. I did hear of one lender using AI in their call center. So when a customer will call in, they'd use AI to understand whether that customer was vulnerable or not from the conversation that was happening, and then adopting a very different sales process for that customer because of the sense that they're getting from that customer interaction. I don't necessarily see it happening in broker world at the moment. It may be efficiencies and understanding a bit more, but I still think there's going to be a dependence on the broker and having that personal view of the customer.
You see, I agree with a lot of what you said there, but there's some points that I do disagree with. So I think that whether a case is straightforward, prime, whatever you want to call it, or whether a case is specialist, I think actually a set of logic, a set of rules with some machine learning, some AI, etc., can get to a decision on lending in a large amount of cases. Okay. What I think there is a lack of is lenders, and especially the large lenders, although some are a lot better, at being able to mobilize that in their back end. Okay, because I think there is still this huge sea of legacy systems, all of which have very complex pathways because they've been built on top of each other, that actually the cost, the efficiencies that would bring by being able to implement that logic, rules, AI in order to make that decision, the cost of putting them onto a new platform and actually decommission their existing, that would far outweigh the costs of actually the efficiencies. So I think there's this concept and of what AI can do. Yeah, and I don't think anybody is disagreeing with that. It's actually the reality of putting that on a large scale into the process that Martin was talking about, whereby an advisor can key at one end and it can go straight through to the other. And then we haven't even touched on the conveyancing world, right? So I think that there is absolutely a recognition that there wasn't probably 5 years ago, an absolute recognition now that you can use technology, AI, large language models, machine learning in a completely different way. It's how do we do that at the cost that is affordable for lenders and providers and distributors as well.
I don't disagree with anything of that. I don't think there is because I think some are already employing plausibility models. Let's say a case comes in, it sits within our our top and bottom. So there's a lot less activity because it seems right based on AI rather than not actually being based on AI. So I don't disagree with that. I think we'll get more of that because I think the transaction now we're moving into product transfer world. We're not looking at a risk for 2 years. We're just looking at a risk for 10, 15 years because of the continuing servicing of the customer. So yeah, I think you're right. We're in a different world. And the attitude to risk is a little less black and white.
Yeah, back in that 2008 period when the world was caving around us, we had a business model that did mainstream all the way down to any kind of arrears and CCJs. As we started to incur losses, which we never incurred previously in terms of repossessions, we had such a minute amount of repossessions because every case in a specialist world or in a subprime world as it was back then had a set of eyes actually taking a look at it. What was interesting was, and I know AI and technology has improved since 2008, but the book that went bad on us was the credit score, what we thought was super duper clients going through an automated process without there being a set of eyes on it. And just like we're saying, the importance of advice remains for consumers with advisors despite technology. I'm absolutely convinced, certainly more so in the specialist space than the mainstream space, but even in aspects of the mainstream space, that there's nothing better than having a set of eyes over an individual case. So it'd be interesting to see how that plays out. But look, I'm really conscious of everybody's time, and I suppose I just want to pick up on a few last remarks, really, because we've covered a lot there in the 45 minutes or so. I suppose we said we wanted to be nice and optimistic looking forward into this 2025 year, and what's great is we've got this beautiful trend that we're seeing with intermediaries having a greater share of that total business volume that's going to be written, which 530 billion plus with the product transfers, which is encouraging. We've also got we've indicated the benefits of advisors actually really sweating the back books and making sure that they've got organised, they're using the data to make sure that they've got the opportunities that are being served up to them, they can make the most of. The repurposing of assets and getting involved in a specialist space there was important. And then this desire to keep customers out by ring fencing them, by if they can't deliver the advice themselves, partner with somebody who can. I just wonder what else, if there's maybe one or two areas that you think advisors should focus in on through this year to really make themselves successful. What should those one or two areas be? And probably as you're on screen and in front of me, Emma, probably what would those one or two things be in terms of what do you believe advisors should really focus in on this year to give themselves the best chance of being successful?
I think they should understand what they want in their business, okay, and then use their network or DA firm or whatever to help them. And what I mean by that is, some people want growth, some people want more productivity, some people, and so it's the advice firms understanding exactly what their business plan is for 2025. Where their growth is, but also recognizing perhaps where their strengths aren't, and ensuring that they have a solution to that problem rather than just ignoring that problem. And that might be referrals, that might be collaboration with others, that might be technology, it might be whatever. But I would say it's, the market is going to be up. I think it's going to be a good market. I think that share of the market will go up for advisors. It's going to be a bigger transaction year, but it's organising yourself as a firm and understanding what you want from that, and using the advice networks to be able to help deliver.
Excellent. And Neil?
I would have a plan for this year. So I would say, right, we know we've got stamp duty ending in April. So what are we doing about that now? Or I'd say when there are big remortgage product transfer months, and have we got a lead into those? I think over the last probably 3 to 4 years, we're almost going back to 2010 when we were saying, oh, cash is king. So understand cash flow, because it's going to be a busy year. I think brokers have probably been running hard now for 2 to 3 years. We want to make sure that everything runs smoothly for them. So I think the one thing I would say is have a plan, understand where your business looks, what your business looks like month on month, so you can take a break when you need it, but also just understand the activity that you'll be getting involved in. Don't forget consumer duty. Emma and Martin talked about protection. So we also maximise the value of each customer as opposed to transaction. So you don't lose sight of building a client bank or making the most of your client bank, depending on where you are in your business cycle.
It's a bit cliched, isn't it? But fail to plan to fail, isn't it? So, yeah, point taken. And Martin, probably your final words for yourself then in terms of the priorities for this year that advisors should have.
Yeah, I think there's two things. I think taking Emma's point one step further is actually, as a principal or an advisor, go, actually, which bit of the jobs do I enjoy? Like you can't not do the compliance, you can't not do that bit, but do you just like doing mortgages? Is that what you like getting up to and helping people, and do the other bits stress you? Well, actually, this is your job. You've got your banner behind you, Jason, about the mental health charter. It is, there are no solutions for the other bits that you don't like to do or don't feel as comfortable or as confident with. So either decide not to do them but refer them. We mentioned that, but make sure it happens every time. So you then can concentrate on the bit that you like of the advice process, or challenge yourself to train yourself better at them to give yourself that confidence, because you're going to spend a lot of time at work, so you want it to be as stress-free and as enjoyable as possible. And I think the last bit is you can't over communicate to customers. You need to make sure that they know that you're here, because as we say, you can't be just that bit, I've sold the deal, I'll come back in 2 years or 5 years and talk to them. You just need to because we sit there and wonder what's happening with swap rates and when rates are being pulled, and we're doing it every day of the week. These people are doing it every few years, and all they're seeing is what's on the news, which is not all, can be a one-sided way. So talk to them in some format, not necessarily face-to-face or verbal, but get things out to them that are giving your view of what's actually happening, so that they trust you with their challenges.
Brilliant final remarks there. So look, establish the areas of advice that you enjoy the most, have fun with that, partner with the right third parties, and whether that's a business like Crystal or whether it's just technology partners, partner with the right sources, and be optimistic as we go through the year. The numbers suggest we've got more volume to look forward to, and the share, despite what's going on with various technology advancements, the share is very much increasing and continues to increase in the intermediaries' favour. Look, I'm really grateful for the three of you joining today. I know you're all really busy. Great way to start the year off. Wish all three of you a brilliant new year, successful new year, and let's hopefully in 12 months' time we'll be looking back having made brilliant predictions and have enjoyed a great 2025. But wish you loads of luck for this upcoming year, and thanks very much for your time.
Thank you.
Thanks,
Thank
guys.
you.